Time! So we're going to be looking at the market, the Bitcoin market, and also got a few things here that I found on the internet that I would like to share with you. So as you already know, I do have a website, www.crypto38.com. If anybody wants to buy some Bitcoin, buy a hardware wallet, I have referral links in there that you can click on, and it will redirect you to the proper exchanges or website that will allow you to purchase either Bitcoin, other cryptocurrencies, or a hardware wallet, or even if you want to earn interest on your Bitcoin. So let's get a real quick rundown of the market cap. So as you can see, the entire crypto market cap is above $1 trillion. That's a good thing, and it continues to go up. When I started, the amount of cryptocurrencies that were around at the time when I started was 2,000, right? I got into this late, but still early at the same time, as they say. So when I got into it, it was about 2,000 cryptocurrency coins. We're up to 8,271 cryptocurrency coins, all right? So there's plenty of cryptocurrencies out there that you can check out. Just make sure you always do your research. Of course, the big dog around here is Bitcoin, and that's where the money's at. And so here we go. Number one, Bitcoin is up to 35,576 so far on the day, 9.6% up. Ethereum, second place, has held on to that since the crypto market has been around. And then, of course, you have Tether. After Tether, you got Polkadot with fourth place. XRP, Cardano, which is doing great now all of a sudden. It went up to the highs, I think, 39 cents. Litecoin, which has been around as long as Bitcoin and Ethereum. You got Bitcoin Cash, it also went up. Of course, when Bitcoin goes up, everything goes up, and that's the main reason I have most of my money into Bitcoin. Chainlink, it went up, also went up as high as, I believe, $23. So a lot of the altcoins are performing because as Bitcoin goes up, everything follows, right? Stellar Lumens, 29 cents. Binance Coin, $44. USDC, which is a stable coin. So, you know, we're not going to look at the entire chart. One that goes up also, Uniswap token, $9.23. Okay? So overall, the crypto market is doing good. Okay, I don't know if people keep saying that all this stuff is going to go to zero, and whenever time I look at these charts, all I see it doing is going up. So I don't know, you know, what charts are they watching, what news station are they on, what experts they rely on. I see something going up. For some reason, they see something going down. I guess we'll find out who's right and who's wrong. For right now, Bitcoin has proven everybody wrong. Okay, so let's move on. So right now, as we said, Bitcoin is at 35,800 and it's consolidating. What does consolidating mean? Well, just a big word for saying that it's going sideways. It's stabilizing in price. And so remember how I kept saying that we was high on the RSI and we needed to come down, and usually every time we hit this above the 70 RSI, we come back down below the 30, then we go to the 70, then we come to the 30, then we go to the 70, right? That's a pattern that repeats itself either in the stock market or in the Forex market or here in Bitcoin, in cryptocurrency, right? Except though that I did say last time, we need to analyze to see if within Bitcoin the same thing is going to happen or not. The reason I say that is because unlike the stock market, the Forex market, we have limited supply here. So the RSI might be affected differently. Now I'm just, you know, taking a guess on that. So, you know, I might be wrong, might not. But for right now, I've been actually waiting for the RSI to drop below 30, because that's the best time for me to get into Bitcoin or to buy more Bitcoin. You understand? So it hasn't gone down there, but we're consolidating, and we actually came down and hit this 26 exponential moving average a bunch of times already. We hit it. You can at least say 1, 2, 3, 4. 4 times we hit it already. Usually on these indicators here, once it shoots up like that, it always comes back and hits the indicator, and then it goes back up. So technically, being that we already hit it, we can actually go up at any time from here. The pause is, of course, is the RSI, and we did drop down below it, and so I've been trying to wait if we're going to go under 30. In the meantime, what I did was, the high was 42,000. When it came down to 30,000, I bought a little more, and now I'm waiting to see what's going to happen. I'm trying to see if it's going to come back down to 20,000, and if it comes back down to 20,000, then I'll buy some more, right? In the meantime, I'm going to wait because I already added a little bit at 30,000, so I'm just going to sit here and wait. If it ends up going back up past 40, then I'm not going to add at 40 either, because I had added at 40 as well. So I'm going to wait. For right now, I'm just waiting. What I'm trying to see is if it comes down to 20,000. If it comes down to 20,000, I'll buy some more. All right, so I was on the internet, as always, researching stuff, and I came across this real estate investor here. And I believe this video here, his knowledge also ties into Bitcoin. And so I decided I wanted to share it with you. So I'm not going to play the entire video. What I'm going to do is I'm going to get in at the certain points that I have written down here on my notes, and then we'll skip to the other parts. I'll probably pause in between just to say a few words, right? So let's start with the Fed, the Federal Reserve Bank.
Pressure. I want to just point out a few things that the Federal Reserve is doing right now that you may not be aware of. The first thing is they're purchasing assets right now. So one of the reasons that the stock market is on the rise right now is because the Federal Reserve is actually investing in the stock market.
Now, if you can see, it says central banks asset purchases creating fake markets, analyst warns. They're no longer related to any fundamental analysis whatsoever. So I'm always hearing people criticizing Bitcoin, saying that Bitcoin is a Ponzi scheme, that Bitcoin is a pyramid scheme, that Bitcoin is a fraud, that the only way Bitcoin works is if the greater fool buys it at a higher price, right? Well, guess what? You can say the same thing about the stock market. Right now, and you can look this up, but he's describing or informing us that the Fed is buying all the assets, right? And therefore, he's propping up the market. If he didn't buy those assets, if he didn't buy those stocks, right, it will come crashing down. Okay? So that's why people are saying that it's a fake market. It's an artificial market. I know it's kind of hard for some people to vision that, because they say, how can it be fake if people really getting real money out of it and things like that? And that's because the stock market does not reflect the economy. During the pandemic, people lost their jobs. Businesses were shut down, but yet the stock market continued to go up. Why? Well, he's explaining to you. He's letting you know the reason it's been going up is because the Federal Reserve has been buying all the assets up, right? And where does the Federal Reserve get its money from? Well, they just hit the keystrokes on the computer. I need $50 billion, and poof, there you go. You got $50 million, right? Let's continue.
That's primarily the reason. It's propping it up, and it's creating what many people think is a fake market. So that's number one. Number two, the Fed has bought billions and billions of dollars of ETFs, electronic traded funds, which is also part of the stock market, and they're going to continue that in 2021. The Federal Reserve has also bought mortgages in the past, and they're also propping up the housing market, the commercial market, all those kinds of things. So it's really, really important that you guys keep your eye on the Federal Reserve. So there's been a lot of criticism from the Fed, because here's why. If you take a look at their balance sheet, which hopefully you guys understand, tells kind of where the Federal Reserve has been in the past. As you can see over the years, this started in 2007, but right here during this coronavirus, They went from $4 trillion to over $7 trillion. And that was money that was printed, and that was money that was given to the people, it was given to the businesses in the form of PPP. It was all kinds of relief money, but they went from 4 to 7 trillion. And there's a lot of people that believe that this number here, which is right now at about 7 trillion, is going to go up over 10 because we're not quite out of the woods yet. So, as you can imagine, the Federal Reserve is under a lot of pressure right now, and a lot of people are questioning their policies. In fact, with all the printing of all this money, are we going to see rapid inflation? Are we going to see our currency devalued? All of those things are in the process of being discussed. But here's what the Federal Reserve is saying about all that. They're basically saying that they're defending the pedal to the metal policy, and they're not fearful of asset bubbles ahead. But that's what everybody's saying, is be careful of all these asset bubbles. So that's what everyone's concerned about. Are we in these asset bubbles right now?
So the bubbles, right? If you keep hearing on the news, certain economists, experts saying there's a stock market crash coming, there's a stock market crash coming. Well, this is why people have those fears, because people who understand this, like this gentleman right here, know that all the stock market, all the assets, everything is being propped up by the money printing that's coming from the Federal Reserve, right? It's not like people are actually out there through the jobs producing goods and services that are causing the markets and the real estate prices to go up. All that is being caused by the money printing from the Fed, who's trying to keep an economy alive, which has actually been dead for years now, right?
Asset bubbles in Bitcoin, asset bubbles in the stock market, asset bubbles in real estate. All of those are things that you have to be watching as the Fed continues to pour more money into the economy to try to keep things afloat.
Now, of course, he mentioned Bitcoin in there. He said asset bubbles in Bitcoin, and people think asset, but the Fed is not buying Bitcoin, right? People around the world are investing into Bitcoin, and so this is not, Bitcoin is not like the Bitcoins are being created by the miners, okay? So it's not like the Fed is pumping up the Bitcoin market, right? So that's one thing I wanted to get there. Should we continue? Let me see.
In 2021. Very, very important that you keep your focus on the moves the Federal Reserve is doing for 2021 as you start to make your decisions for next year. So let's move to the second point. Interest rates will remain low through 2021.
All right, so we already know that the Fed has decided to keep interest rates low, right? Which they're at basically at 0.
So it's my belief that we're going to see a rise in inflation, and here's why. In August 20th of this year, the Federal Reserve came out and said, and I quote, the definition of price stability was to aim for 2% inflation. And if you look at the year-over-year averages, it's been right underneath that. Some years it's been higher, some years it's been lower, as measured by personal consumption expenditures price index. It describes this goal as symmetric, suggesting that equally concerned about inflation falling below or above that target. Okay, so in the past, the Federal Reserve has had a target at 2%. What's very, very, very interesting was in August, they came out with this statement. The Fed says it will likely aim to achieve inflation moderately above 2% for some time. Okay, that's a statement that we haven't seen before for a long period of time. That suggests that the Federal Reserve is going to be a little more loose about the inflation policy. In fact, the Federal Chair, Jerome Powell, called this strategy a flexible form of average inflation targeting, which officials are calling F8IT, which is a form of average inflation targeting, at the 2020 speech, as you guys can see here. So this is fairly recent. The Federal Reserve is basically saying that inflation will rise. So here's what we know so far. We know that the Federal Reserve is involved. very heavily. We know that they're buying stocks, they're buying ETFs, they're buying mortgages. We know that they want to keep interest rates low, and we know that they want inflation to rise. Those are three things that I want you to be clear on as we move into the next slide. So the next slide, which is really, really important.
All right, so that was interesting because you're always hearing people saying there is no inflation, there is no inflation. I don't know what earth they're living on. When I go to my supermarket, the prices are higher. I remember going to the Chinese store as the cheapest place to go buy food. And I remember when I was about 18 years old, going to the Chinese store, I could get the pork fried rice with the 4 chicken wings with $2.50, right? Just about last year before the pandemic, I was paying about $6 and something for that same pork fried rice with 4 chicken wings, right? Just recently, I've been going to the Chinese store, and now just to get that same pork fried rice with 4 chicken wings is costing me somewhere around $8 to $9, right? And like I said, you go to the supermarket, prices are way up there as well. So now we're gonna skip to 15 minutes into the video.
To summarize what we have at the moment. The Federal Reserve does not want deflation because with deflation, people lose more wealth. And so we have high unemployment, low interest rates, so people will invest. And we're going to see inflation, as we already talked about. Deflation is the opposite. That's what we had in 2008. In 2008, people's values in their homes went down, and then the home was worth less than the mortgage. That created a whole nother problem. What we're seeing now, because of the Federal Reserve, is that they're injecting cash, and the housing market's going up. So people are literally out of work, not paying their mortgages, and we're seeing record increases in home prices. So the Federal Reserve does not want a deflation, it wants inflation, and that's what we're seeing right now.
Okay, so that's very important. And the reason that statement hit me so much was because I'm constantly always hearing in the news that the rich keep getting richer and the poorer keep getting poorer. And that during this pandemic, although you had all these people out of work, including myself, right, the stock market continued to go up, real estate prices continue to go up. And that's the Federal Reserve that has been creating that for years now. And if the Federal Reserve ever stops doing that, the entire economy will collapse. And that means, like he just told you, all that wealth that has been built up for generations, right? Because as they say, the wealthy people are only going to look out for themselves, right? And so they don't want their wealth to go to zero. So they need the Fed to keep stepping in there and keeping this thing going for as long as it can, right? So they don't want to let the markets come back down and normalize, because all that wealth is just going to come crashing down. So in other words, if I'm a wealthy person and my house right now costs $1 billion and the market actually came down to real prices, my house will probably be worth $500,000, right? And we can't allow that because that's my wealth, right? So all the wealthy people would just be angry if that was to occur. And of course, all those people in these high positions and the politicians that work for the corporations and all that, that's what they're trying to maintain, and that's why the rich keep getting richer, and the Federal Reserve is there helping them continue to get richer, right? So let's just rewind that one more time just in case you missed it.
Went down, and then the home was worth less than the unemployment, low interest have at the moment. The Federal Reserve does not want deflation, because with deflation, people lose more wealth. And so we have high unemployment, low interest rates, so people will invest. and we're going to see inflation, as we already talked about. Deflation is the opposite. That's what we had in 2008. In 2008, people's values of their homes went down, and then the home was worth less than the mortgage. That created a whole nother problem. What we're seeing now, because of the Federal Reserve, is that they're injecting cash, and the housing market's going up. So people are literally out of work, not paying their mortgages, and we're seeing record increases in home prices. So the Federal Reserve does not want a deflation, it wants inflation, and that's what we're seeing right now. The second thing is the Fed raised the inflation target, as you guys saw. That's a big, big indicator. Number 3, prices will rise. What inflation means is that prices will rise. Number 4, interest rates will stay low. And number 5, the Fed will buy more in 2021. So you need to keep your eye on all of these things as you guys are investing into the next year.
All right. So far, you know, he just broke that down. Now let's move over to 19 minutes into the video.
And 3% wage increases as well. Okay, so let's go to the next thing. This is how inflation works. If you want to take a look at a dollar, this is the purchasing power of a dollar at 3% inflation for the next 50 years. Okay? So I wanted to show you this. If we're at $1 now, that same dollar, so it's still going to be a dollar, but it's going to buy less. Now, this is a long period of time, so you don't have to go all that way, but you just need to understand that each 3-year period gets you all the way down to here. And so that dollar, that's why prices go up. That's why food's up. That's why all the things that you might be consuming right now, you're starting to see prices already rise. Yes, there's supply chain issues. Yes, there's all kinds of other things, and we can get into all the details. But the bottom line is the Fed raised their target number. So this is going to happen. So if you're saving at 0, and you have savings, which is why I said savers are losers, and your target rate is above 2, maybe 3%, you're actually losing the purchasing power of your hard-earned money. So you need to be in assets that are inflation adjusted. That's what you need to do, and real estate is one of those things.
And Bitcoin.
So let me show you something really cool that I found on the internet that you can do yourself. So on this website, RL360, as you can see here, you could type in RL360. This is the impact of an inflation calculator. So what I did for you was I typed in US dollars, so you can type in any dollars you want, savings, $100,000, kept for 10 years at 3%. And you could put in anything you want. This is an RL360, great little website. But here's what it shows you. If that money is in savings, in 10 years' time, your dollars are worth $74,409. Okay, that's if you just hold savings. So what you want is you want this $100,000 in something that's inflation adjusted. You want something like debt, believe it or not. As again, cash is a liability and debt is going to be an asset. It's going to be the opposite of what you've been told since you...
Okay, so that chart, and by the way, I love this this LED screen that he has here. You know, I wish I could afford that and get one of those, right? But this person, his name is Ken McElroy. He's into real estate, right? So if you want to purchase homes or you want to get into real estate, you can check him out. I just started checking him out. So far, I like his talks. They're very informative. He will give you a lot of information that you can go and research on your own as well, and therefore you can fact check everything he says. But this particular chart, I really loved it because this is one of the things that the Bitcoin community has been telling people for the longest, and that's that the purchasing power of your US dollar continues to go down. And so, but prior to this explanation here on this specific segment, he was explaining how in today's world, today, cash is now a liability and debt becomes an asset. And that's because the interest rate to take out a loan now is at 0, right? And then as inflation starts to go up, because the Federal Reserve is going to try to reach that a bit higher than 2%, let's say 3%, 4%, 5%, 6% inflation target, right? By you taking out a loan now at a fixed rate, not at a variable rate, at a fixed rate, you will actually end up winning on that loan, right? But if you keep your money in just cash, and this is stuff they're not going to teach you in school, in public school. I wish they would have taught me this in public school. I probably wouldn't be in the poor conditions that I'm in here now. But if you just hold on to cash in your sneaker box, in your bank account, it's not going to do anything. You're actually going to lose money. So that's why every year when you go to the store, the inflation, the prices are going up, and the purchasing power of your US dollars is going down. So that's why you need more dollars to pay for that TV. You need more dollars to pay for that car. You need more dollars to pay for that house. You understand what I'm saying? So what he's recommending is that you put your money, your cash, into an investment vehicle that's going to hedge against that and actually give you something. So one of his ideas, of course, is real estate, because that's what he's into. And I'm totally 100% for that, which is what I'm also going to start to get into as well. But Bitcoin, it's another opportunity to do that, where you can take that cash and invest it in something that's going to maintain your wealth and actually create value to your wealth, right? Because as I'm going to show you, buying a house, it's almost impossible as the Fed continues to pump more money into the system and these asset prices continue to go up. That's why here in New York City, the housings here are so expensive. Like, to get a really, really nice home in New York City, you're going to spend about $1 million, right? Anywhere from $800,000 to $1 million. And to get some really, really luxury stuff, you're going to be talking about $2 million, right? And that's because of all the money pumping that's going and buying of these assets, right? And so Bitcoin, real estate, gold, things like that is what you would use to put your money in there, so that, or your currency, because the US dollar is really not money, it's currency, right? But you can take your currencies, put it in something that would actually grow your money instead of leaving it. I know a person who told me they have about $10,000, and they've been holding on to them $10,000 for years now, because they keep telling me that they keep saving their money, and they keep telling me how much they have. And I'm like, well, you should invest that in something. I told them put it in Bitcoin, but they're scared of Bitcoin. So I said, so put it in stocks, but they're scared of stocks. So it's like, you know, you're losing out on so many years of your wealth growing by just keeping it in cash, because our money is being devalued by the government itself. So that's why he says, if you're a saver, you're losing out, right? So it's hurting the little people, while the wealthy people, as he said earlier, even though nobody's working, nobody has a job, and they can't pay their mortgage, the prices of their houses continue to go up, so that later on in the future, when they sell it, they'll be able to recover their losses, right? All right, so that's for that video. Let's go to this next video that I also seen here. Now, this guy here is also into real estate. And listen to what he says about this situation as well.
Grant Cardone joins us now. And Grant, thanks for coming back on, man. Let's start with the update I was just talking about there in the Realtor.com report. Obviously a hot market right now, but prices are rising on slim inventory. So what's your outlook for real estate here in the new year?
Zach, the middle class are going to get priced out permanently. The great divide will get wider, and wealthy people are picking up the second and third homes like most people buy Skittles, or the way we were buying toilet paper back in March.
You hear that? The wealthy people, right? And that's because over the generations, first of all, if you take it back to when the people first came to this country, right, or the Europeans were going around the world just taking everybody's land, right, those lands were being passed down from generation to generation. You had people that served in the army, and then they couldn't pay those soldiers, so they gave them land grants. So they just gave them big portions of land just for serving in the army because they couldn't pay them with no other way, right? You have people who actually worked very hard to get what they had, right? But the whole thing is that the ability for your average Joe like me to get where this person is getting harder and harder as the years go by. And that's basically what he just said there, right? The wealthy people, they already got the money, right? So he calls them skittles. They just going about, you know, they got 10 properties. Well, they're going to buy 10 more because they have all the wealth. They have all the money, and their assets keep growing in value year after year from all the money put in it that's going on, and the Fed buying all this stuff, right? While your average Joe who's working hard 60 hours a week, his wage that he's getting paid is barely keeping up with inflation, and therefore it makes it harder and harder for that person to get a house. So your kids, your grandkids, it's going to be way more difficult for them to get a house, because right now you're looking at $1 million for a nice house. Well, in the future, your grandkids are going to need about $5 million to get a nice house, right? And so everybody's eventually going to become a renter, and you're going to be renting from the wealthy who are just going to be sitting back and collecting rent from you, which is basically what he's going to end up describing.
Well, that sounds very depressing, Grant.
And they're giggling about it, right? They're giggling
the
about
average
it.
person's not able to grab a house today. Like, after the pandemic, the banks went to 20% down. Now they're going to do double and triple checks on how you did during COVID to see if your future employment is stable. It's going to get more and more difficult for people to buy a home. In the lowest interest rate environment we've ever had, the middle class will not be able to take advantage of it. And literally, this validates this concept I've been telling and pushing on for years, which is cash is trash, and the wealthy are turning their cash into real assets.
Yeah, when you talk about that divide, certainly what we've seen with the broader economic recovery over the last several months, when you talk about the demand for homes right now, certainly low mortgage rates, a big driver, but we've also been hearing a lot about these new tools that are in place. More and more people feeling comfortable without even visiting a home or actually seeing it and buying that online. Can you speak a little bit to that and how significant a driver that has been in pushing prices even higher?
Yeah. So number one, I think that people are their trust for cash is so low now, probably in my lifetime, at epic low levels. Like, I don't want cash. We have printed 21% of all the US dollars in existence today on planet Earth were printed in 2020. Wealthy, intelligent, financially intelligent people know they do not want something that is being destroyed, but they want something real. When you add to that technology where I don't have to visit, I don't have to look, I can trust the 3D, I can trust the walkthrough, particularly with experienced real estate investors like myself. You know, I buy a $150 million piece of real estate that has apartments in it. I'm gonna look at 2 of the 400 apartments and do the due diligence on the rest later. So sophisticated, intelligent, second, third, fourth time buyers know they don't have to go visit that house. Kitchens are kitchens, living rooms are living rooms. They're buying locations, they're buying great markets. There's this massive migration going on, and technology is assisting the wealthy in turning garbage, fiat, cash into real assets that will be worth more in the future and benefit from inflation.
Okay.
Yeah, and I'm glad.
And you see how he ended that, and benefit from inflation, which is on the last video the guy was explaining about inflation, right? And so this is how the wealthy continue to get wealthier, right? They already have all the wealth. When I want to go get out a bank if I want to get out a loan, for example, right now I want to get a loan to go purchase a house, I won't be able to get it. I won't qualify. Why? Well, I lost my job during the pandemic, and so even if I tried to get assistance from my state to be a first-time home buyer, I need to at least have been working for the last 2 years. Well, I wasn't working for the last 2 years. I've been out of work for almost a year now because of the pandemic, right? So automatically, I'm not going to make it. My credit score is good, right? So I'm going to need a down payment. I don't have that large down payment because they're requesting a 20% down payment, right? So if the house is, let's say there's a house for $110,000 and you say, wow, I can do, you know, $110,000 house. That's doable for me, right? But I'm going to have to put like $22,000 on that $110,000. And where am I going to get $22,000 from, right? Well, I got it, Bitcoin, right? Because I'm investing my money in Bitcoin. The returns on Bitcoin are faster than the stock market. And so slowly my money is actually starting to return an investment that's really good on me, right? But anyway, he said you benefit from inflation. And so I thought that was interesting. Also, let's go.
Average home in America is $295,000. That's probably $500,000 in LA. I need $60,000 to $100,000 in cash for a down payment today. There are no 5% loans today after COVID. I need 60 grand down at minimum. I need a great job. I need good credit. Otherwise, I'm not going to be able to take advantage of the house or the mortgage. And this is going to drive America into the renter's market.
Yeah, that's a good point. And when we talk about
the renter's market. So this is where we're headed, right? Because nobody has money to purchase these expensive homes, right? Only the wealthy have the money for it. The banks themselves, right? Because if you don't pay your taxes, all these millions of people, they are late on their mortgage, right? Once they can't pay that, guess who steps in to take the house? The bank, right? So the bank is going to have all this inventory, all this wealth that's going to be on basically on their balance sheets, and this is how they continue to get rich, right? And the one who's helping it all is the Fed, and that's because the economic situation that we're in, the Fed has to keep printing money out of thin air, right? Because it was a system that was started a long time ago. Once they got off the gold standard, so they don't really use real money. Right? They go just giving people loans. They go to other countries around the world. Yeah, you need help. Fine. Hey, take this $22 million loan. Don't worry about it. Just pay us back $30 million. And then, of course, that country can't pay back that loan. So what happens? Well, they take their land. And that's the real wealth. That's where the real wealth is, right? Because when they gave them that $22 million loan to that country, all they did was go on the computer and type in $22 million and then just digitally send it over to them through the internet, right? So anyway, I thought that was very interesting. And that's the reason why I put my money into Bitcoin. And so far, I've been doing good with Bitcoin. I actually have more Bitcoin than I have today, but I sold some, as I said before, to pay off my credit card debt. One of the best things I ever did. I also panic sold a few times, which of course I learned my lesson. And the best thing I've done so far is just hold, and I'm doing good. And I think for persons like me, your average Joe who doesn't really have much wealth, Bitcoin is a solution for us, right? You seen what he just said, cash is trash, and that people don't want to hold on to cash. Why do you think Michael Saylor from MicroStrategy took the cash that he had and said, you know what, I'm going to put all his cash into Bitcoin? Because he's smart. He knows that by just keeping all his money on his balance in the form of cash over the next 10 years, he's going to lose money. You see? So this is stuff they don't teach you in public schools. They don't teach you in school. And I wish they did teach people this, because we'd be a whole lot in better conditions. But maybe they don't want everybody to know this. Why? Well, because everybody becomes a renter, like he said, right? So now you got all these people here, especially here in the hood, right? They can't afford homes, so they have to pay rent to the landlord, just like in the feudal days, right? Pay rent to the landlord, and the landlord just sits back on his chair, on his laptop, collects money. Like you see, he said, I don't even have to go to, I can buy houses and just use the laptop, the phone to do virtual tours, and I don't even have to set foot in that house and make all the arrangements and sell everything, because we live in this modern world where they use technology, right? So we have to become smarter. But the problem is, it's going to be really hard for me to get that first house, right? So what am I doing? I'm using Bitcoin to get there. That's what I'm using. I'm going to use Bitcoin to get there, continue to put my money in here as a store of value. And when I need money, I have enough money here that I can leave some in there and also take some out so that I can go get that first home. I'll be able to purchase that first home, and I won't need to get approved from the bank. Because the only people they approving are the wealthy already, right? Because you got my credit score is good. But I've been out of work since the pandemic came, so I ain't got no job, right? So I'm already. But let's say I did work, you still have to make a certain amount of money in order to get the loan, right? So even getting a loan is difficult. Everything is difficult, and these asset prices continue to go up. So you don't want to keep your money in dollars. You know, you're better off putting it in Bitcoin. Oh, go if you could afford it, go do some real estate. You know. So anyway, I thought I'd share that with you. Of course, we're still at 36,000 here on Bitcoin. Let me know what you think down on the comments below. Of course,